This is why Trump just told everyone to buy stocks in 2026. And if you think 2025 was wild for tech, memory, and storage stocks, you're only seeing the first act. The market isn't just alive, it's about to move dramatically. And the reason ties directly to where memory, data, and AI infrastructure are headed right now. In 2025, memory and storage stocks didn't just perform, they dominated the S&P. SanDisk led the entire index with a massive rally last year, rising more than fivefold as AI's data storage needs exploded. Western Digital surged nearly 290%. Micron climbed roughly 240%. And Seagate was up over 200%. It's all fueled by a memory and storage supercycle driven by AI demand that didn't end on December 31st. Here's the reality. AI isn't just about compute anymore. It's about data. DRAM prices climbed sharply in 2025. NAND storage prices jumped dramatically as hyperscaler data centers, the same ones training massive models and storing petabytes of inference output, gobbled up capacity and forced price increases across the board. That imbalance didn't magically fix itself over the new year. It persisted into 2026, and supply remains constrained relative to demand. So when you hear something like Trump told everyone to buy stocks in 2026, interpret that through the broader lens that policies, macro liquidity, and fiscal stimulus are aligning with real structural shifts in tech infrastructure growth. The federal government's emphasis on the AI economy has created an environment where memory and storage are critical inputs, and when a critical input is in short supply, prices rise, earnings expand, and stocks follow. Here's how the key players stack up. Seagate isn't a niche hard drive maker anymore. It's a core provider of data capacity for cloud and AI workloads. And in early 26, the stock continued to attract strong interest, with further gains on top of its breakout 2025 rally, driven by robust demand for high-capacity storage and next-generation recording technologies. These help maintain healthy margins. Micron, the DRAM and flash memory leader, posted record revenue in its fiscal fourth quarter 2025 with strong pricing power and tight supply conditions, especially in data center memory products that feed AI applications. And analysts see that momentum carrying into 2026 as AI data center growth accelerates and DRAM demand outpaces supply globally, with shortages expected to extend well beyond this year. Western Digital posted solid Q4 25 results with double-digit revenue growth and expanding margins fueled by enterprise storage demand as massive data creation from AI workloads pushes demand for both traditional hard drives and specialized flash memory solutions. SanDisk has become perhaps the poster child of the memory boom after spinning out as an independent flash and SSD leader and delivering huge returns as enterprise flash demand surged. Its high-capacity, energy-efficient solutions are exactly what large data center operators want, and strong sequential revenue growth is expected to continue as AI infrastructure builds out across hyperscaler environments. Now, here's the key point for why the market could move dramatically tomorrow and beyond. Memory and storage prices are still elevated going into 2026, and supply constraints persist, with industry participants warning that shortages could extend through the end of the decade as AI data center demand continues to absorb capacity that would otherwise go to consumer and enterprise market. Retail investors already sense this shift with significant inflows into memory and storage chip makers in early 2026 as the themes of AI demand and memory shortages become clearer to the broader market. This isn't a pie-in-the-sky thesis. It's rooted in supply and demand. This is fundamental. AI infrastructure requires exponentially more memory and storage components than traditional compute. DRAM and NAND supply chains are booked out well into the future because manufacturers can't scale capacity fast enough without risking oversupply once the next cycle turns, leaving a prolonged period where scarcity supports pricing and margin. And don't forget the SNDK run. SanDisk stock has continued climbing in 2026 with double-digit gains year to date as memory and storage narratives broaden across the market. And analysts are raising targets on the back of structural demand. So tomorrow and this year, the market could move dramatically, not just because of AI hype, not just because of Trump's comments, and not just because of liquidity trends, but because the memory and storage backbone of AI is tighter than most investors realize. When pricing power meets structural demand, stocks tend to overshoot on the upside before rationalizing later. And that's exactly the setup we're seeing with STX, MU, WDC, and recently SNDK. So keep an eye on those tickers. The catalysts are real: elevated pricing, constrained supply, expanding data center demand, strong retail interest, and broad recognition that memory and storage aren't commodities anymore. They're mission critical infrastructure for the AI economy. That's why a message like buy stocks in 2026 resonates with the memory storage theme, because these are exactly the kinds of foundational assets that drive growth when data is the new oil and memory is the new refinery. So be ready for volatility, but also be ready for real moves tomorrow and into early February. If you want to dive deeper and get daily breakdowns and analysis, join our community for a $25 trial at stockscommunity.com. And if you want to get a transcript of these videos delivered straight to your inbox, sign up at free.stockscommunity.com. What I'll probably mention tomorrow personally in the Discord is SanDisk is probably a little overbought. STX, Seagate looks better. See you in the Discord.